should be out. I think the press release is just getting uploaded on the exchanges, so just watch out for that. I think we have the first number. The net profit has come in at around 2,869. We were estimating a number of close to 2,875. So that number appears more or less in line with what we were
Some
estimating.
more numbers. The gross NPA in terms of percentage has come in at 0.91%, which compares with 0.95%, so that's eased a bit. And net NPA stands at 0.25% versus 0.27% on a quarter-on-quarter basis. Anyway, the asset quality for HDFC Bank has been very stable. Its stressed assets perhaps is amongst the lowest in the industry. In terms of the net profit, it's come in line with street expectation, a jump of close to about 20-odd%. Awaiting what the NII figure is, so we're trying to calculate that. But in the meanwhile, Ekta, you'd like to get in a word on the profits as well as asset quality?
Well, it's bang in line with estimates. So there's no complaint coming in for the HDFC Bank numbers prima facie. 2869 compares to around 2381.5 crores. And that would be a comfortable growth of around close to around 20-odd%. So that's a growth of around 20.4%.
6680.9 is what the NII is.
How much is it?
6680.80. And that's actually better than what you were anticipating.
That's fine. That's also in line with estimates. That's better than estimates, better than what we were working with. So that too is a growth of over 20% in terms of the NII figure, which has come in for HDFC Bank this time. So largely you can say that they have met expectations. I want to see how the stock is doing. It's absolutely flat at this point in time. Maybe an intraday chart should come up for you as well to see how it's reacting. It's already up around 15-odd% on a year-to-date basis. And that gives you a sense that the numbers, while it is a trigger, it's more of a slow and steady riser for HDFC Bank. But overall, overall, it's a good set of numbers. You have a 21% growth in terms of the NII. You have the profit, which is up around 20-odd%. You have the gross NPA, which has improved around 4 basis points this quarter on a sequential basis. So they've in fact improved their gross NPAs. That's amazing. And the net NPA also has improved to 0.25 versus 0.27%. This generally tends to happen even on a good set of numbers. There is always some amount of profit booking in some stocks that we notice, and maybe because of the valuations, it's already trading at over 3 times or 3.3 times its FY17 price to book value. So overall, it looks like a good set of numbers. We'll wait by and basically get more from the management as well in terms of commentary and maybe get the absolute figures for the gross NPAs and the net NPAs.
Well, I can give you those.
Okay.
Right,
the net interest margin has come in at 4.2% as well, and this compares to 4.3% in the previous quarter, and so there is a dip of around 10 basis points, which was expected because remember that they also took that 35 basis points base rate cut that took place at the end of August. So that factored in for this month, or for 1 month at least. So 4.2 versus 4.3% in the previous quarter, 10 basis points reduction in terms of the margin figure. And maybe that could be a niggling worry because it was 4.4% in Q4. So if you look at it, it's been around 20 basis points in terms of a reduction that we've seen in the net interest margins. I think we have Vaibhav Agarwal of Angel Broking joining in to talk about the numbers. Vaibhav, your first take on HDFC Bank and in line?
Yeah, I mean, broadly on the key numbers such as the net interest income, the bottom line, as well as asset quality, it is bang in line. I think overall a pretty good set of numbers given the environment. I think it's again a steady set of numbers. On the margins, again, you know, the dip probably a little bit higher than expected. We were expecting around 5 basis points sort of a decline. But another thing that has been happening in HDFC banks in the last quarter or two has been a significant increase in the fixed deposits, you know, as people are moving their savings accounts to FDs in anticipation of rates coming down. That may also have continued to play out in this quarter as well. So we'll wait for details on that. But otherwise, at least on the NII growth as well as bottom line, it's bang in line.
Okay. What is your sense in terms of the asset quality? The fact that the gross NPLs have improved by 4 basis points on at least a ratio basis?
You know, clearly, I mean, HDFC Bank has more or less been, you know, pretty rock solid on asset quality throughout these quarters. In fact, you know, the slight improving trend is sort of continuing, and they have more than enough profitability to continue providing for whatever slippages they are seeing, and which is the reason why even the net NPA, you know, number is well in check. So I think on those parameters, more or less, they remain quite rock solid.
Okay. Just a couple of more details that I wanted from you, your sense on it. The provisions have come in at 681.3 crores, so it's a decline on a Q-on-Q basis, but it's a rise on a year-on-year basis. Do you assume that there would be some amount of floating provisions that would be added in this quarter as well?
We've got the floating provision number. It stands at 50 crore in this quarter.
Okay, so 50 crores of floating provisions this quarter. Vaibhav, your take on that?
Even last quarter they'd done 65 crores.
So, yeah.
Very clearly, the profitability is allowing them to even make floating provisions, which is again a sign of strength that, while maintaining the bottom line growth, they are even able to provide floating provisions. So I think that's another, small point in favor of the bank.
Okay, well, let me read out how the provisions has been broken up. The total provisions, I think, stands at 681 crore this quarter. This consists of specific loan loss provisions of 484 crore, general provisions of 133 crore, floating provisions of 50 crore, and other provisions to the tune of 14 crores. So that's the breakup that they've given. Some other details: the total deposits have gone up by 29.7%. CASA deposits have gone up by 20.8%, and
just before that, Reema, in fact, we have more crucial figures, which is the absolute figure on the gross NPA as well as the net NPA, which is now flashing on the screen. So the gross NPA figure has come in at around 3,828 crores. This compares to 3,652 crores in the previous quarter. So it's a marginal rise of around 5% that we've seen in terms of the gross NPA. Compare this to around a 6% rise in Q1 on a sequential basis. And the net NPA figure, I think, has come in very close to that 1,027 crores that they did in the previous quarter, 1,037.7 crores. So that's been quite flat as well. Vaibhav, why do you think that the stock might be in fact giving up its gains at this point? Any particular reason? Maybe the net interest margin disappointment on the fact that the stock is one of the key outperformers?
No, I mean, I don't think the results have any reason to see any mild correction as well. Probably the markets are also just, correcting right now. So a little bit of rub-off of that as well could be there. But otherwise, I think as far as the numbers are concerned, we think it's a good set of numbers and would not say, take any negative view on the stock as far as the results are concerned.
Okay. What would you like to hear from the management?
Well, for HDFC Bank, of course, they've been able to navigate the whole environment quite well. But at the end of the day, it is a, sort of a highly valued stock growing at 20% earnings in a market which is decelerating to just 10% credit growth. So some management, commentary on how they see growth continuing to pan out. Even the deposit growth, like you mentioned, is very high at 30%. Whether they see that kind of growth sustaining and, also from a slightly medium-term perspective with the competition that is coming into the sector, do they see, themselves sustaining these kind of high growth? I think that is the key determinant for HDFC Bank.
Okay, let me run you through some more details. The advances growth stands at 27.9%, which is driven by domestic retail loans of 29.3% and wholesale loans of 23.7%. The total restructured assets stays at 0.1% of the gross advances, so unchanged from the previous quarter. And the fee income, Ekta, has come in line with your estimates at 21.6% growth on a year-on-year basis at 1,868. So in all parameters, it looks broadly unchanged and steady set of earnings.
Absolutely. The fee income for last quarter also was up around 21.8%. So this quarter an above 21% growth is quite healthy for HDFC Bank. It's continued to maintain the momentum that it's seen on all parameters. In fact, the advances growth of around 27.9%, which is led by retail of around 29%, indicates that it's even better than what they did last quarter, where the advances were up around 22.5%. You compare this to other banks which have reported in terms of credit growth, and you can see the difference in terms of the credit growth that HDFC Bank has reported this time round. Vaibhav, just wanted your thoughts in terms of the net interest margins. The fact that it's now declined 20 basis points from levels that we saw in Q4 of FY15 of March this year. Is that maybe a niggling worry for you?
Well, I think this is more of a, sort of a quarterly phenomenon, and they should be able to stay in that broader range of, that 4.5 to, sort of 4.2 to 4.5. And the other thing that has been, happening, like I mentioned, their FD growth has been really very high in the last 2 quarters, and the CASA ratio has come down because of that. So that is also seasonally impacting their margins probably, to an extent. But once the FD, fixed deposit repricing continues to happen, I think their margins should once again, sort of revert back a little bit. And as the base rate impact is already behind us, but FD costs can still, come down in the coming quarters. So, so that should, help probably, maintain and slightly improve the margins in the coming quarters.
Okay, we have one quick word coming in from Deepak Shenoy also, who joins in to talk about the HDFC Bank numbers. Deepak, what is your sense?
Hi, Sonia. The numbers look, pretty much as expected. A little bit higher than I expected, I think.
Okay. On what parameter was it higher?
So, net profit, I was expecting this to an exact around 20%. I think it's a little bit more than that. I haven't done the exact calculation. So, I haven't seen the figure on CASA as yet in terms of the ratios. Have they dropped substantially? But the 4.2% margin is very good in comparison with the rest of the banking system. I believe these, the digital initiatives of the recent times should help. In fact, if we don't know the specific numbers, I have got to get the press release, but they opened up a wallet and they've got a lot of transactions in urban areas that are trying to push in through those mechanisms. I want to see the growth of that to see whether this will offset the potential loss in CASA growth that they will see in respect of the new banks that are coming in. That is the primary focus, but otherwise the numbers are on par, a little bit higher than I thought in terms of net profits.
Okay, we have Hemendra Hazari also joining in to talk about the numbers. Hemendra, it's a 20% growth in profits this quarter, 21% growth in the NII this time round as well. 6,681 is where the NII is, and the profit is 2,869. Your take?
So this is in line with the analyst expectations, because I think analysts were expecting anywhere between 20 to say 22% growth.
Yeah.
And HDFC Bank very rarely disappoints on analyst expectations. So this, from the initial numbers that have been reported, seems to be well within that expectation by the analysts.
Okay. Hemendra, what about on the net interest margin front? It's declined for the second consecutive quarter. It stands at 4.2%. I know it's expected because of the base rate cut, which was affected by the bank, but how would you read it?
I think that is to be expected, as very rightly pointed out, that they have reduced their base rate, so there's bound to have some impact. Even at, 4.1 or 4.2, that's a very handsome margin, and probably the highest margin in the Indian banking sector. So, well, yes, there is a decline, but I think that has to have been expected because of the base rate cut. Okay.
Any reason why you would think that the stock is selling off? It's just down around 0.5%, but would that just be attributed to routine profit taking, considering that the expectations were met?
Yeah, I think that would be the case. Probably also the market just may be slightly disappointed with the reduction in the net interest margin. But I think, a combination of profit taking and the slight reduction in the net interest margin may be causing this some weakness in the stock.
Okay, quickly then, last word, Hemendra, good numbers then from HDFC Bank?
Yes, I would say so. That I think the banking industry, the others are going to report disappointing numbers. So given that, I think HDFC Bank results are good.
Okay. And Vaibhav, if we still have him with us?
Yeah, absolutely. I think it's a good set of numbers, and, for a quality bank like HDFC Bank, I think it would remain a buy for us. We have a target of 1265, and, we would retain that after these results as well.
All right. And Deepak?
Yeah, I think results are in line. I'm not, I don't have a buy or a sell on it. I think technically the stock needs to go a little bit higher before it becomes attractive.
All right, fair enough, gentlemen. Thanks very much for joining in and taking us through the HDFC Bank Q2 earnings performance, which has been largely met on all parameters, just the net interest margins, which are down 10 basis points on a sequential basis, but that was largely expected this time.
All right, Ekta, thanks so much for joining in and taking us through those numbers. By the way, the Nifty has moved to the low point of the day, and the Bank Nifty